Okay, this is timing strategies for July 31st. Client blog update. This is not a recommendation to buy or sell or take any action whatsoever. This is an update blog for clients. If you're not a client and you come across this, you have any questions, please feel free to give us a call or send us an email. Clients already know this. So again, this is just a communication platform for client accounts. Using our RIDEX end of day system, we went long yesterday based on that bar, not in the S&P, but in the energies and the materials. If you checked yesterday's post, we were long there 10% in the RIDEX energy services, and we went long, that was 10% of account value, and also we went long 5% account value in the RIDEX materials sector. At the same time, we are still short the Russell, using the IWM as a proxy there, from back on the 22nd of July. It's kind of a hedge for our long short accounts. My estimations are, and then we also have again a 10% position in the precious metals fund. We were long 20% from that point. We took half our position off in the high range bars. We maintained a 10% long position still. I'm looking for that potentially to trade as low as 38 bucks on the GDX. If we get too much more of a sell down into here in the next day or two, we will unload that 10% position in the GDX, and also we'll take a look at the XL, and again, we'll unload it, opting to reload at this $38 price tag if we get that. But right now we're in a range on just about every market, and we have to give a benefit to the range, more so until it proves itself to be a range expansion one way or the other. And that range on the GDX for the precious metals goes all the way back until last year at that $42 price tag. Now, if the XLE breaks below the low that we got long from on basically Tuesday, Wednesday, we may go flat that XLE or the energy services, because we're still looking for that $69 price tag. Depending on how the bar trades, how the range expands, if it does to the downside, if it happens fast enough, quick enough, instead of just jettisoning that long position and going flat, we may add. If it just waffles around first, for several days where we're at now, and then breaks, 1, 2, 3, 4, 5 days inside basically this range that we're in right now between yesterday's high and Tuesday's low, depending upon the price action, we'll determine what we're going to do with that position. But as of now, we're still long 10%. And let's take another look at the S&P. My estimations are, and like I mentioned yesterday, is that we're going to range in this area too for a little while before we break one way or the other. Regardless of what Cramer tells you, booyah, booyah, booyah. The market very well may not have put in a bottom, and it very well may. We've got the election cycle. We're late in the season. There's generally a very strong influence for the markets to magically go up this time of year. It's just a matter of, if that happens, where is it going to start to really move up in rapidity or with the momentum from? Is it going to move up starting from where we were at the lows of Tuesday, meaning right here? Was that the actual test of the low end of the range, and are we going to start to expand further in the next few days higher? Or are we going to get that one last flush out of the lows of Tuesday? Or was that Monday? No, that was Monday. Are we going to get one more expansion lower, testing the lows of July the 15th, and potentially washing it out to where I keep calling for a very long aggressive position of about 50% at least, maybe more, at 1175, 1165 on the S&P cash, which comes out to about 1170, 117.50 to 116.50. I'd really like to get long right in this level right here. If we can get a big expansion, one last crushing blow to make everybody's chin and jaw drop down into the low end of this range, at least to 122, 122 half on the spiders, and 1220 on the S&P cash, I'll be more interested in getting long more aggressively based on how the price bar trades over a period of 1 to 2 days. Other than that, the benefit of the doubt, I think, is that more likely than not, this range that we've got from the lows of, again, July the 15th to where the highs were back on July the 23rd are going to be basically the defining level in between this area of where we need to get long and short from. I'm not interested in trying to buy one and sell one day versus the next. You can get cut up pretty bad unless that range expands to a point of safety as far as really putting in a ceiling or a floor. So bottom line, we have a hedge on from our long positions in our long only accounts, in our long short accounts. We are long 25% in our long only accounts using the precious metals, the materials, and the energy sectors. And we're just going to let the market kind of dictate what we're doing. My estimations at this point is that the market's going to range. There's plenty of room in here. There's about a 5% swing level that we can move in and out of. And I'm kind of work between that level right now, between the 5% range, between about 123 to about 128 on the spiders, 128 and 129. If you have any questions, please give us a call. We'll give you an update when we do some more position changes or if anything interesting happens. Have a good night.